and you have to ask yourself, what did you get the IUL for? Did you get it for a big death benefit to leave all this pile of money behind to your family? Or was your primary concern a tax-free income stream down the line, which is kind of the marketing thing going around these days?
If you could, would you explain a little bit about what CBO stands for and ROP, so cashback option or return of premium versus an IUL?
Yeah, that's actually a common thing we're running across these days. And it seemed like there was this boom where, agents were selling this cashback option and they'd sell this return of premium option, virtually the same thing. And they sell it as this investment vehicle. Mm-hmm. And an investment that gives you the same amount of money back 20 or 30 years later is not an investment. Your money depreciated. And, a return of premium product has its place when there's like a reduced paid up option. So you pay like $100 a month. You got a $250,000 policy. If you pay $100 for 30 years, you would have paid $36,000. You'd have a $250,000 death benefit if you died less than 30 years. And then if you're still alive, which hopefully is the plan, you're going to have an option to take your $36,000 back in cash or a reduced paid up benefit, which may be like $100,000. So like, God forbid, you're on your deathbed and 30-year mark comes along, your insurance carrier would be calling you and saying, hey, Ashley, your 30-year mark's up. You have an option right now to take $36,000 and with no health or underwriting or qualifications, you're able to have a choice to say, hey, I'll take my money now, or I'd like to leave my reduced paid up benefit behind of $80,000 or $100,000, like whatever the benefit is based on the individual. So it's nice to have a choice in that aspect, but for agents to sell those as investment vehicles is definitely not the case.
Right.
Now, an index universal life, or even a whole life for that matter, they both are going to accumulate some kind of cash value. Whole life usually builds at like 4.5% guaranteed year after year after year. IUL has a floor of 0, but a potential for a higher gain. So, either one is a good alternative, especially if someone's putting $100 in a return of premium versus $100 in an IUL. Well, after 20, 30 years, you can turn on a tax-free income stream from your IUL. And it could pay you a benefit the rest of your days. Granted the performance as well, but the potential to 4 or 5 times your money versus just get your money back, an IUL is a great alternative.
And what is one way or something that, if someone listening to this, maybe they have an IUL. Okay. And there's been a big push out there in the media in the last year. Right. I think it was somewhere close to, I think it's like $30.9 billion in IUL premium in just in 2023, just from social media. Right. And 450,000 policies written. A lot of those policies, I would assume, if it's kind of like one of those trends that is pushing out, just like the ROP and the cashback option. There's going to be some mistakes on those, and the way they're built. So what are some things that someone who has an IUL can look out for to make sure that they're structured properly?
Yeah, great question. So a couple pointers that people want to look at is, and you have to ask yourself, what did you get the IUL for? Did you get it for a big death benefit to leave all this pile of money behind to your family? Or was your primary concern a tax-free income stream down the line, which is kind of the marketing thing going around these days? And, agents, they make commission when people buy insurance. And if they gear your policy for the death benefit, you could pay $500 into one policy that has a big death benefit, and you could pay $500 into one that has the minimum death benefit. But the one that has a bigger death benefit, more money of your money is going to the cost of insurance as opposed to your retirement. So if your primary concern here is a tax-free income and saving up some cash value in that product, make sure that they geared it for the minimum death benefit and then distributions down the line. Instead of this $1 million death benefit, for a small amount of premium. Like if you wanted a big death benefit, get a term. Get a whole life where rates don't ever go up. but there are certain advantages to an IUL, and that's a tax-free income stream down the line. But to maximize that cash, you got to have a minimum death benefit on there.
Okay, awesome.
If you like what you're seeing, please subscribe. Click that comment button down below. Drop your comment down there. It helps us tailor content to our audience to helping these families across America. Lastly, do not forget to subscribe to our ongoing newsletter with Stress Less Financial.